morning, good evening, good afternoon, wherever you are in the world. This is John with Tommy's Top Picks here to bring you your weekly flesh and blood market update. We have a lot going on this week, and it is a little crazy. So let's just jump right in. I have some financial stuff to talk about in a minute, but I want to get to these box prices because, boy, have they moved around. Don't know exactly what's going on, but there is an old adage in finance, which I don't think has anything to do with this, but might be something to think about or give yourself hope. Little heartwarming little adage that's used, and that is sell in May and go away. And that is a old school finance thing where basically get rid of stuff, sell your equities, go on vacation for 3 months. Not quite that, but basically the idea is that summer and late spring kind of is a doldrum and not really useful time to expect growth. So might as well get out of the market, hold in cash, etc. That was a very old way of approaching finance, and that hasn't been used in probably decades for real, but it is a fun little thing to think about. I don't think that's what this is. I doubt these price drops are because of financial people going on vacation. It's just not how it works anymore and in this space. So we'll talk about that a little bit more in a minute. Let's jump into the box prices. We'll start with Tales of Aria Unlimited, down 6.52% to 46 from 49. Not too crazy. We've seen it, kind of in this range. I guess this is a recent low, but the 49 is low. And, we've been here for a month. It's possible it bounces back up. It's Tales of Aria Unlimited. I really doubt it will. We've been lower for sure, 43 back in February. So it's, range bound on that little sideways trend. I don't think it's even worth looking at the chart for. Going into unlimited cases, 189, down 5.29% for Tales of Aria as well. This one, I don't think we've actually seen case prices this low, but again, it's Tales of Aria Unlimited. So I guess if you want a case or you've been waiting to get a case, it's a pretty good time. It's the lowest it's been in my recording of it, I'm pretty sure. And I'm pretty sure that's well below. Well, no, map's probably well off on this now. Yeah, map isn't relevant to that. Anyways, definitely a thing. I would say if you're wanted a sealed case, this is a thing to do. I don't recommend these sorts of things, but there's no financial advice on this channel at all. So there's that. All right, first edition boxes. This is where things start getting a little crazy and interesting. WTR first edition down 9.84% to $2,000 from $21.99. I don't know if we've seen this number since I've been recording, like basically since it went up the first time. Let me just double check because I know I started recording on the downtrend, and I don't think, Yeah, I don't know what it looked like on the way up because there may have been some pullbacks and stuff, but that's some data I just don't have. WTR rise, which happened, I guess, Arc and Crew timeframe, right around this timeframe, 2019, 2020. Yeah, I think it was. But point being, it hasn't been since I've recorded for the past few years, and this is a very low price at $2,000 for a first edition, WTR box. I can't imagine there's a lot of those out there anymore, but that said, questionable whether it's worth holding on to them or not. I will always hold on to my acrylic sealed case, even if the game extinguishes itself. I will love it forever. There's no stopping me. You cannot take that box away from me. That said, I am moving what I can that's not interesting because I have better places to put money these days. So Arc is this is first edition box, down 28.66% to $1,000. This is a crazy low price. Again, same thing. Have not seen this since I've been recording. We had the longest time where kind of these price ranges held, right? We had a little dips here and there, but they always bounce back. We're now in a new kind of era of super low first early edition stuff. I'm imagining this is capitulation. And I will say, as a result of seeing this quick drop on multiple old products, I actually pulled all my stuff up because I don't want it to sell. That stuff that is like older, actually some of the other stuff too, basically saying, you know what, it's not worth selling into capitulation. I'll just hold on to it. What I haven't sold, I have. And that's just how it will be. And if we, have a J and recover it, as I think is very possible given the nature of the game, the interest from competitive players and the rest, then I'm in it. If not, I'll have a sad day of a lot of boxes that I don't know what I'll do. I'm not sure because I have more boxes than I would just leave on my shelf. Just put it that way. So I don't know. Maybe I just toss them or something if everything goes terrible. I don't think that's going to happen. I don't think I need to worry about that. But we are definitely reaching that capitulation phase where everyone thinks that's the reality. That said, 7-year mark's coming up. Is a difficult time, especially for card games. New phase of existence that we're seeing now, new financial structure that we're seeing now. We'll talk a little bit about the Fed, but basically they're holding steady here, and I think they're going to do it for a while, and we'll see what happens, but I think it's explicitly to drain capital out of places like this. Moving on to crude, down 12.5% to 352 from 396. Crazy time here. I have watched this box for a bazillion years. This is one of the ones that I think was my first like expensive purchase sort of thing. And it's crazy to see it this low. It's just not realistic in my mind from the sense of its how old it is and how rare it is. That said, if this is full capitulation mode, then that's just where it is. People just don't want it anymore, and that's fine. I'll tell you, I'm not picking them up myself. I'm not interested in putting money into something like this right now when you can get 5% interest rate for the foreseeable future. Now, the beauty of this, right? When the Fed does this sort of thing, when everyone starts pricing in no rate changes, guess what happens? That's when the markets start to flop because everyone gets a little panic started. And then guess what happens with panic? It expands and grows and people pull out of markets excessively. And we see this big drop that we've been waiting for. And that happens. That's it. I've been saying that it will happen at some point for a long time. And I know no one would trust me. I wouldn't trust me if I was listening to me at this point because it's just been wrong. All the economists have been wrong. All the people that look at this stuff have been wrong. This has lasted way longer than historically normal, and lots of patterns defy historic flags. That said, you got to do what you got to do, but nice high interest rates means there's other places to put capital that are less risky, more like classic economics, actually, and might kind of reset the system as these things go, which is probably a good idea because, there's no denying that the system has been flush with liquidity for decades, since like '08, we would say, at minimum, right? So it's one of those things where the reset's probably a good thing. I wish it was faster. We talked about this, I think last week and also many, many months ago that, I thought it was going to be fast and we'd see a crash and then we'd come back. Clearly not what's going on here. And we might be seeing a prolonged, extraction of capital, which is, I guess, what the Fed wants to do. It does make for a soft landing if you don't have a flash crash, right? So maybe it was the right move. Maybe they just saw there's too much built up in the economy, and the only way to do it safely without seeing massive destructive reductions was to basically structure it in a way that it was slowly drained out. That said, the results of that, you start to see the same thing happen, or you start to see very negative things happen in commercial banking as a result of commercial real estate, the way it's structured and what's happening in the economy. Obviously that's partially because no back to work sort of thing, or work remote is a bigger thing. But part of that is because interest rate, when you renew that capital, you have a higher interest rate and you have to pay these big interest payments on these commercial loans. And that becomes untenable very quickly, or relatively quickly, I would say. Not very quickly, obviously. It's been a long time coming. So anyways, let's move on. Outsiders, first sign of good news is up to $78 from $74, up 5.13%. Nothing much to talk about here. It is pretty cool that we're seeing an uptrend on this. I would say it's an ongoing uptrend, right? We have this, I meant to grab the picture. It's basically a step ladder, which I think is cool. I think that's a very good thing. Outsiders is a very good example of 2.0. So I'm hoping we see this pattern repeat in the newer stuff. But again, liquidity pulling out of market, etc. I do think they've done a good job with removing product from market, or not having too much in the market, or maybe shops not buying as much. I'm not sure. I will say Outsiders is still available at distro in my current view of things. So the fact that it's going up at this time isn't a terrible thing, right? That's kind of cool. Might be the right structure. I don't know. Moving on to first edition cases, again, WTR down 14.29%. This is kind of a fake number because this was a fake number and this was a fake number, but basically what it boils down to is someone's testing the low on TCG Player to see where it will sell, if possible, on TCG Player. I'm guessing it won't, because who's going to spend $10,000 on TCG Player? It's just I don't see it happening. I could be wrong, but if you're going to spend that kind of money, you don't want 15% in fees. Period. Like if you're selling something like that, you don't want 15% in fees. Period. Might as well sell it direct and get a better price. I guess there's a little more risk, but I mean, I think there's going to be risk either way. ARC is down 13.21% to 52.99 from basically 6,000. Again, I think this is a more real price because I think we have Card Shop Live as a similar situation. But that said, I don't know that anyone's actually going to sell through TCG Player. Maybe at this price, maybe people would be comfortable with this. I don't know. I wouldn't buy through TCG Player for this, nor sell that way. So for me, it doesn't make sense. Moving on to Mon, down 4.29%. This first edition cases to 280 from 292. This is a sad day. Mon came out in a boom. If you probably know the story. $500 boxes before release, all that stuff, and 280 is a new kind of low place to be. We may have hit it once or twice before. No, we haven't. Not in the recording of this. Yeah, 300s was the low before. So yeah, 280, new low. Mon first edition, cold foils are in there. I don't know. Yep. Moving on. Uprising up 10.39% to 279 from 250. So again, 2.0 stuff seems to have some push up. And again, this is still available at distro, so not a bad thing to be at 279. I think there's a minor margin in that, like a couple bucks if you're selling a case based on what you're selling from. Like $5 or something. I don't know. Based on what you're selling from distro prices. So, margin is a good thing for a shop. They can sell it and make money. And that's actually where I think heavy hitters in a Mist Veil are both very interesting because first edition, they're always first edition. Heavy hitters cases are up 6.19% to 339 from 318. And it's still available at distro. That's a great margin. Like if you're selling at that price, that's good. And I believe there's 2 different sales in the last week or so, week and a half, something like that. So that's a really good sign. I should have had that up. I apologize for that. I meant to have 3 charts up and I forgot to put them all in the tabs and I'm not going to go search for them while we're talking. But anyways, that's pretty good for this situation, considering it's available. And that is a nice healthy margin. As a shop, that's attractive. As soon as I saw this, I was tempted to order some, put it that way. Cause if I can sell it anywhere close to this price, even if it comes down $20, like that's fine. Like you can make some money on that. That's a good shop purchase at that point. If this is their goal, if they're trying to get shops in a place where it makes sense for them to carry it, this is doing a good job. I don't know what's causing this, but, I think that's a good thing for a shop, the way it's structured. So again, 2.0 I think is heading the right way, but in a difficult macro environment, we'll see what happens, but interesting nonetheless. And then the weird outlier, because we've never seen this before, up 12.03% to 399 from 355 is Miss Veil in pre-order status. What? I don't remember pre-orders popping up that high. Let me just double check real quick. Yeah, no. What's that one? Outsiders was the last one that had something like that, and it was a little ways out. Wait, where was that? I lost it. It's one of these. Anyways, it's like a month and some change out. About the same spot, actually. Maybe a week later, but still. Outsiders was the only other one to do anything that got over 5%, and I don't believe it was a 12% jump. That said, this is pre-orders. None of this counts, right? These are pre-order prices. How often do we say, don't trust the pre-order prices? Guess what I'm going to say now? Don't trust the pre-order prices, right? So take it with a giant grain of salt, but it is interesting to see this. It is, and this is important, not available in case form, or, well, obviously not box form, in case form at distro right now. So the first wave sold out. That's what I think is part of this price jump. Is it realistic? No. We know they have other waves, right? So again, don't be crazy, don't jump on it, but it does give it some price memory, some price anchoring up above and where it should be for MAP to work, right? So I think it's a good thing. I think they're doing the right, market structuring of their product release, and nothing wrong with that. Nothing wrong with that at all. Couple of news items. I don't have any cards today, so we'll just talk about some news. So sit back, relax. Let me just make your life interesting by talking about economic news, and you can take a nap. As I said, the Fed is holding where it is. It had some comments. There's some ex-Fed conversation happening recently, and some Fed comments made that basically said holding where it is, not seeing the declines we want to see, which we know based on the jobs report, inflation, which was up a little bit, but not a lot, but it was up instead of down, right? And what else did we see? There's another economic indicator in the past few weeks that was basically too hot. So point being, we're not seeing it come down. It doesn't look like that will happen. The markets are pricing one interest rate change for the year, where I think at the beginning of the year they were saying 6, 5, something like that. So point being that there's a lot more aggressive opinion throughout the year, and every quarter it's just kind of gotten knocked down. And now I'm seeing even some predictions. First cut is Q1 next year. That said, when the market starts pricing in these longer term things, that's when things start to crash, because it means drain the money out, right? Put it in safe spots, blah, blah, blah. All these things start to happen. Self-fulfilling prophecy, self-fulfilling economics. It's been a long time coming if it does happen. I'm not going to trust it till I see it now. And, fool me once, fool me twice, fool me 3 times. I'm sorry. I've been telling you the wrong thing for years, literally years at this point. It makes me sad. But following economic history and indicators is the only thing you can do. You can't predict the future. You can describe the past. It's about all you have when it comes to economics. So anyways, one interesting note, Powell, Federal Chair Powell, came out and said he sees no signs of stagnation or inflation, therefore no on stagflation, which is something I said last week. And he was clearly listening to the podcast. I mean, Powell, if you're out there, you're welcome on the podcast anytime. I'd love to have a discussion with you about cardboard prices and withdrawing of capital from markets. If you're welcome on anytime. So hit me up in the comments. I know you're listening because you responded to me by saying there's no stagflation. I don't think he was listening to me. I think others have said the same thing. They saw the same signs I saw. And what it boils down to is he says no. I continue to hear analysts say yes. So I think the signs are there. Again, they have better data. Powell has armies of analysts digging at every edge and corner case of data that takes a lot to unravel. That said, even the best data, the Fed has crashed most economic structures. They haven't been very good at managing it precisely. It's very difficult science, art, whatever. It's soft science, I think is how they officially say it. But point being that, they have a tough time of it. I'm having a tough time of it. The classic indicators aren't working. We're in a new economic regime, and it's interesting times. It's a lot to learn, and always open to learn. You got to follow the data to do that. But that said, stagflation, while it is not clearly happening in the way that it happened in the 70s, it's a heck of a lot of mathematic indicators that say, this is a lot like the 70s. So I think it was 1974, 73, 74, something like that, has a very similar structure. So anyways, point being, while it may not be a stagflation yet, I'm not sure that it won't be stagflation. That said, I would love to be wrong on that one. That would be fantastic. Please prove me wrong like you have for the past few years. Make the economy do a thing I'm not expecting as the last few years. That would be fantastic for you, me, and everyone else, because no one wants stagflation. Literally no one wants stagflation. It hurts everyone. This isn't like a good situation to fall into if it happens. There's some good signs that it won't happen. So, call it a 60-40 situation, if you will. So, we'll see how it plays out and see what happens. As of right now, mark your calendars, 5/8. Chair Powell says no stagflation. So hopefully I'm wrong and it doesn't happen. Defaults are rising in commercial. That's a sign that we are starting to see some weakening. I did see some analysts that were saying Powell, you're crazy, you should cut. I disagree with them. I think they're also an extreme. If you cut at the point where it has not cooled off sufficiently, then you will end up having reinflation, and we've seen that happen too. I think that was the 80s, or I don't remember exactly when that did happen though. They cut too early, and we saw what happens there. It's not great. So we're just gonna hang on. That's what the Fed says. They're gonna hang on for a while, and it looks like at the earliest the markets are pricing in next year price raise, end of the year sort of thing. Interest rate raise. So if you have long-term debt and you're in a low rate, hold on. If you have in a high rate, if you can refinance, pay off as fast as you can, whatever. If you have extra capital, get into low risk things. No advice here, obviously, but low risk, long-term gains are great. Nothing like having bonds and those sorts of things. It's pretty good. Equities are probably going to be at risk at some point, but again, been saying that for a while. I don't see it yet, so I'm pretty evenly split with some cash on the sidelines ready to go. And yeah, that's about where things are. But yeah, no financial advice here. Just obviously, I've clearly been wrong for a long time on a lot of things, so forget about me. I don't know what I'm talking about. It's just butt advice, right? That should be a t-shirt, right? TTP, butt advice. TP, butt advice. That's actually more funny than I knew. Anyways, moving on to, other signs. We are seeing some commercial paper expire and not go well. Defaults are up. I saw something, it was the number like 116%. It was on a very small sample size, so the number's not. It sounds more dramatic than it is. I think it was like Q1 or 2 months or 3 months. I don't remember if it was Q1 or what. It was some rolling number, basically over year, so last year, and it was up like 100%, and essentially it was like 7 instead of 3 or something. I can't remember. It was small. It was a small number. It was not a remarkable thing or something you need to concern yourself with, even though that number sounds a lot. That said, we are seeing, increased pressures on commercial real estate. Eventually that will hit the regional banks. We're seeing now the new sign, which I just mentioned, was the higher debt failure for retail, basically credit card defaults, things like that, maybe car, maybe house, I don't know, whatever, commercial, retail, not investments, debt is starting to go. At increased rates. I don't have a number for that, but that is said to be happening. I will say that was a narrative that I heard while driving around DC at a business thing. I went to an AI conference. It was a lot of fun. AI is insane, and DC AI is even more insane, like crazy stuff. If you've ever watched, what's the show with the robots in the Wild West? Oh, I'm blanking on it. Whatever that is. That show with Dorothy or something like that. Really good show, except for the later seasons got weird, but the first season was great. That kind of AI is starting. That's my point. They are at the very baby versions of some of that stuff, and it's nuts. Like the stuff I saw was nuts. Anyways, so that is actually all I have for financial information this week. I don't have any cards to go through. Like I said, I did look at Marvels. Nothing really interesting, honestly. Nothing really moved one way or the other. Nothing lower than it was last week. Nothing higher than it was last week. So I'm sure 1 or 2 cards, tell me which one I'm wrong about, but I didn't see anything that was remarkable for me in the Marvel side of things. So anyways, I hope you guys are out there cracking packs, playing games, and enjoying this hobby that we love. If you made it this far and you care about the economy stuff, #economy. If you made it this far and you want me to talk about, I don't know, cardboard things or other games or something, I don't know, whatever, #cardboard, and leave a comment as to what sort of thing. And if you made it this far and you don't care about either of those things, but you want to tell me that you made it this far because it is interesting to see, I would say, maybe 8 of the last 12 times I've hashtagged, no one hashtagged. So if you did do it, I'm just curious, #made it. Anyways, I hope you guys are having fun out there, and until next time, have a good one.